Hello, good morning, and welcome to today's morning report with me, Richard Perry, market analyst at Tech Markets on Friday, the 15th of August. The European markets have started once again in a fairly positive light, and that has come just generally with the improvement of investor sentiment around the world. That has been helped by comments from Vladimir Putin yesterday that suggested that Russia was wanting an end to the conflict in eastern Ukraine. And now the markets are fairly positive, but obviously it just depends on whether those are just words, whether there is actually going to be some sort of positive action on the back of that. But that remains to be seen. Also, question marks still surround the aid trucks that are still on the Ukrainian border waiting to come in. So exactly what is in those trucks is yet to be determined, and how the geopolitical tensions will play out surrounding that issue is also possibly something that could affect markets in the coming days. But certainly at the moment, the investors are fairly sanguine about things in Ukraine. The Wall Street markets continue to push solidly higher, 0.4% up on the S&P 500. Asian markets also positive, and in the European trading session has, as I said, started positively, around 0.5% up on FTSE, 0.3 up on the DAX. In terms of volatility, the VIX continues to fall away as these markets have settled down. So it certainly is helping the volatility just come down a touch on that metric anyway. Over to currencies, what we're seeing is it's a fairly mixed performance actually today from the dollar. The euro's just reasonably well supported, continues to find buying under that 33.50 mark. I'll talk about that in the euro chart in a bit, but also pretty much across the board there's no real moves that we've seen yet on any of these currency pairs of any note, so we'll see what happens through the morning. There's a lot of data out today that I will go through, and that could have an impact on all the FX pairs. The data starts today with the GDP for the UK, that second reading. Forecast to come once again in line at 0.8%, so no great shakes expected from that number at 9:30. But the action might start more towards the afternoon when you've got the US data. Probably second tier data that we're looking at here, no major data, but certainly the industrial production is always interesting, and the capacity utilization portion of that data will also be interesting. That capacity utilization continues to be improved. Forecast to come in at 79.2, which again would be the highest since June 2008 on that number. So that continues to improve. And also the University of Michigan sentiments is again looking to improve up to 82.5, up from 81.3, and that would be up at the April highs of the year, but not quite at the levels it was seen back from 2013. That number will be interesting due to the fact that retail sales the other day came in slightly disappointing, so markets will be looking for that number to pick up and allay fears of possible consumer slowdown. So that leads me to my chart today, which is the Kiwi dollar today. The Kiwi dollar is nicely now finding support and beginning to break higher. It's closed above this downtrend that it had been in for the past 4 or 5 weeks, and also we're seeing some momentum buy signals as well. You've got a bullish divergence on the stochastics, which has come through here, and also now we're getting an MACD cross buy signal coming through, which could now change the momentum towards the upside. Now, I suppose the more cautious of traders would probably be looking for a break above that 85.34 high that we saw. That would be the confirmation of a reversal, because that's the latest key reaction high within the sell-off. But at the moment, certainly the outlook is improving. On the intraday chart, you can certainly see that as well. It's trading above the moving averages, which are also being used as support. The momentum indicators also on the hourly momentum is nicely improving as well. Trading above that 200-hour moving average is again an important factor, which that had been the basis of resistance throughout the sell-off. So that is an improvement underway. Certainly, it looks like anyway at the moment. In terms of support levels, you'd be saying that the reaction low overnight is 84.65, but then around about the 84.40 mark is pretty much where we then start to see the next key low coming in. So that is where we're looking at today, but it certainly looks like it's going to be continuing to push higher. A series of higher lows there. 85.15 there or thereabouts is the breakout high once again on the intraday chart, and then above that you'd be looking at these breakout highs above 85.35. So a few levels for you to work on there, but it certainly looks like the Kiwi dollar is beginning to turn around after this 5-week sell-off, and we'll see how that goes. But I wish you good luck in your trading, and I will speak to you later. Thank you.